Hey traders, so today we're going to start the video with a little thought experiment. What I want you to do is think about the top 3 professional traders that you follow. These could be traders that post videos on YouTube, maybe they post their trades on Instagram or Twitter, and you consistently look at their analysis, trust them, and follow them. Think of the top 3 people that are like that. Now, out of these top 3 people, the chart we're looking at right now is the euro-dollar chart. Out of these 3 traders, if we were to ask them, all 3 of them right now, do you think the euro dollar is going to go up or go down from where it is right now? Do you think we would get 3 of the exact same answers? Well, the answer to that, of course, is probably not. Depending on the time frame, the rules that a certain trader uses, whether they're a trend trader or maybe they use major levels of structure to trade on like a counter trend type basis, depending on all these different factors, we're probably going to get 3 completely separate answers. Because even after, whether the market's going up or down, the next step is figuring out where a trader's stop is going to go, where their target's going to go. All of these different aspects are going to cause 3 completely different decisions, although all 3 of these traders you're thinking of are more than likely professional, profitable, consistent, independent traders. So the question becomes, if that's the case, then how can we always be right when trading in the Forex market? All that and more coming up after the intro and disclaimer, guys. Also, I'm going to open up a live trade here on the euro dollar. This is a pair we took a look at some analysis on last week. Some of those rules have played out, and now we're ready to actually place a trade on this pair. So we'll be doing that after the intro and disclaimer too. If you are new here to the trading channel, I'd like to say welcome. My name is Steven, your honest trading coach. Click that subscribe button down below the video to the right hand side and the notification bell to be alerted about the valuable content we come out with each and every week here at the trading channel. Click that like button for me while the intro and disclaimer roll, and I'll see you guys directly after. Alright guys, so here we are on that euro dollar chart. Like I said before the intro and disclaimer, we're going to go ahead and open a live position here on this chart. We'll talk through this analysis and why we ended up placing this live trade a little later on in the video. But as we are right now, let's go ahead and open this position. So there we go. We went ahead and bought up actually 2 positions here on the euro dollar. Again, we'll go through that analysis in just a second. But before we do, let's talk a little more about what we were hitting on before the intro and disclaimer, talking about how to always be right when trading in the Forex market. Well, of course, if you came to this video expecting to find a strategy that's 100% correct and always wins, then you can go ahead and click away, because that's not what this video is. And that, I'm sorry, but you will never find. It's not possible to be right 100% of the time. So how are we always right then if that's the case when trading in the Forex market? Well, as technical traders, we trade based around very strict rules. This is how we become profitable. We end up becoming profitable by trading a strategy that has specific rules that have been tested in historical data. So the way we can always be right is not necessarily knowing exactly what the market's going to do every single time we place a trade, but placing a trade every single time based around those rules. That's the importance of consistency, and that's what it means to place trades in a consistent manner. To always be placing trades based around the rules of your plan is going to be the best way to always be right in the Forex market. The reason for that is because you're always trading based around the statistical advantage that you have. And as traders, that's all we can hope for. All we have is that statistical advantage. Maybe you have a strategy that wins 60% of the time with a 1-to-1 risk reward. If that's the case, that's your statistical advantage. Doesn't mean you're going to be right 100% of the time, but it means over a long period of time, over months or even years, you're going to be profitable. You're going to have that statistical advantage. Over 1,000 trades, you're going to win close to 600 trades, and that's going to give you that edge over the market that you're looking for. Over 100 trades, you should be somewhere around 60 that you win and 40 that you lose. And that being the case again is going to give you that edge over the market, and is going to give you a profitable outcome over a long period of time. That's what it means to always be right in the Forex market. That's what it means to always place trades consistently. Consistency means more for our trading in terms of being correct than even what the market does, because we may place a trade that's inconsistent with our analysis, and then the trade work out and we think for some reason we need to change our analysis. that becomes an inconsistent way of trading. And inconsistency is, in fact, one of the main reasons that most traders end up failing when trying to create a career, when trying to create an actual income and quit their job, when trying to achieve everything you want to achieve. Consistency is going to be one of those key steps to doing so. So that's the closest way that I've personally found to always be right in the Forex market. I hope that that helps you along your journey. Now we're going to go ahead and break down this euro dollar chart. We're going to talk a little bit about why we were even interested in a trading opportunity like this and the entire reason we decided to place this live trade. So for the euro dollar, again, before the video, or at least before the intro and disclaimer, we were talking about some traders may look at this and say it's going down. Some professional traders may look at it and say it's going up. Does that mean that any of them are wrong? No. Not if they're following their plan. If there's a trend continuation trader looking at this chart, I highly doubt they're even considering buying this market. As we can tell, this euro dollar chart is definitely not in an uptrend, right? We're definitely heading down, right? So with that being the case, why would I consider this a good buying opportunity? Well, the reason is because for counter trend trades, I know that in my rules, I need to see a market at a previous level of major structure. And this blue line we have here, if you were watching the video from Monday, I do believe, then we pointed this level out as a major level of daily structure that could possibly provide a counter trend bounce for this market. So the preparation for this trade actually happened a few days ago. And in that video, we also talked about the benefits of swing trading. The benefits of swing trading is you can set your trade up days and sometimes even weeks in advance and go ahead and be waiting for that certain key area that you know a very high degree of probability of the market either bouncing off that level for counter trend or using that level as trend continuation if you're trading in trend continuation. And that's exactly what we did here on the euro dollar. We waited on this level to be hit. Again, this is a level that's been tested multiple times in the past. If you want to see how we did that, how we pointed this level out, then I'll put a link in the top right hand corner of the screen somewhere, a little card for you to go to that video from Monday. But this is a level we've been looking at for the past few days. The market has now come down into this level, right? And if I double click here and bring my RSI back on the screen, you can see that we came to this level. And when we did, this market became oversold. We were oversold here, we're oversold here. And this time right here that we were oversold, afterwards what happened? Well, if you know how to read trend, then we have this trend continuation play right here. And what do we look for possible reversals? If you've been watching some of our content for a while, or if you've been through that free training that we offer, three-part training series, if you have not been through that, it's in the description below. But in that series, we talk about this being a high likelihood reversal scenario. We have our previous resistance after trend continuation. What happens here? After being oversold here, this market comes up and breaks above that previous resistance level. This can be a pretty good sign that we could see a reversal out of a specific market. Now, that's not all we have. After that specific break of this little resistance level, the market has now done what? It's pushed back down into this level, which has been tested as support, resistance, resistance here on the hourly chart. And this is also an age-old pattern, age-old price action pattern that we've all probably heard of as well. If you guys are familiar with the head and shoulders pattern, then you probably already see this. We have a market coming down for a head. That here was our left shoulder, coming up, and now could possibly be creating that right shoulder before we break above the neckline of this head and shoulders pattern and head higher. So a lot of things pointing towards a possible reversal here out of the euro dollar. Now, does that mean that we're going to be right? Does that mean we have a 100% chance of this market heading higher? No. But I know that with all these rules in place, you just heard all the preparation that went into this trade. We included the RSI. We included the reversal setup that we talk about in that three-part training series that's absolutely free in the link below. We talked about how this market's coming into a very major level of structure that we've been waiting on for a few days. All this preparation, although it doesn't lead to a 100% accurate trade, doesn't mean it's definitely going to rise and go up. All this preparation with the strategies and rules that we're using does lead to a statistical advantage. Leads me to believe that I have somewhere between a 60 and 70% chance of this market heading higher. That 30 to 40% chance of it heading lower still exists. That's why I have a risk management plan. That's why I have my stop losses in place. I'm ready for this market to go against me, but I'm also in a position to have a statistical advantage over the market. And as long as I do that consistently over a long period of time, then I know for a fact that over a long period of time, I will be consistently profitable. So guys, that's a breakdown not only of the euro dollar chart, but also a breakdown of how we can use strategies and rules and analysis to always be right in the Forex market, at least always right, based around the rules of our plan. The importance of this is massive, guys. What we're going to do is go ahead and pause the video for you guys. It'll be in just a few seconds. You'll see the outcome of this trade. For me, I'll probably have to wait a few hours, so we'll go ahead and check that out right now. Okay guys, so here we are back on that euro dollar chart. As you can see, if I go ahead and bring up my little pencil tool, our wick here on this candle has hit those first targets. Although we were not filled, one of my rules is that I can take off targets as long as a wick touches the target that I was supposed to hit. So for that reason, I'm going to go ahead and close out half of this position. So this trade working out really well. I'm going to go ahead and close out half that position. And there we go, guys. We closed out half our position here on the euro dollar trade. We're going to move the stop loss to break even. As you can see, this reversal trade ended up working well for this 1-to-1 risk reward that we had at the beginning. Of course, we took 2 separate positions out. So trading with multiple targets. We have some more training on trading with multiple targets. 1 in the EAP. 2, you can look across our YouTube here. We have a few different trainings on multiple targets here on YouTube. But this was just a good example of how using your rules, making sure you have an advantage over the market based around multiple different rules, doing some what's normally called CTS trading, combined technical score, looking at multiple levels of structure, looking at RSI, also taking a look at simple price action patterns. All that combined with a specific entry reason that we use in the EAP training programs would allow this trade to end up being a profitable trade of a little over 35 pips. Of course, we're trading on the hourly chart. We weren't looking for a huge bounce. We talked about this last week. Again, I'll put the link for that video in the top right hand corner of the screen. We talked about these counter trend levels giving us just a little bounce out of the market, not expecting a complete reversal, prepared for a complete reversal by taking 2 separate positions. So we're prepared if this market does keep going higher, but we've also went ahead and taken off our targets in case this was just a little counter trend bounce over on the higher time frame, and this market in fact continues in that downtrend that we're in out on the daily chart here on the euro dollar. So that's been our analysis on the euro dollar. That's a little bit about how to always be right in the Forex market. No matter what the market does, whether or not you win the trade, there is still a way to always be right, and that way is to follow the rules of your plan no matter what. Stay consistent, guys. That's going to be a key step to becoming consistently profitable. Also, if you are interested in some more advanced training, if you found value in this video and you're ready to take your trading to the next level, if you're tired of consistently going through YouTube and watching videos that are not quite as helpful as you wish they were, and you're ready to actually learn the strategies and entry reasons, the techniques that we use on a daily basis to make profitable trades, then what I want you to do is go ahead and click the link in the description labeled EAP Training Program. Also, make sure you take a look at that free 3-part training series. Either of those could massively help you on your journey to becoming profitable. Both of those are linked in the description below. They'll be the first top 2 links. Click those if you're interested. If not, that's okay too. Check out some of our other free content here on YouTube. Make sure you're subscribed here and that you click that like button. Make sure to share this video if it brought value to your trading. Stick around through the outro to see some testimonials of other traders who have been through some of our more advanced training, and I will talk to you guys in the next video. See you then.